What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol SPCE for Virgin Galactic Holdings. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be an update. You can see some of our older levels, not really so much in play, especially given the nature of what's recently unfolded. We should point out the gap, right? That's the obvious thing to get into our chart here. We want to know that up and over today's high of day, roughly $11, does start to fill the gap closer to 1205, call it 12 even, but does it really look like a likely scenario based on the structure and how we closed? I would start to say not really, right? It would be very improbable that the stock would do something like that. Now, can that happen? Sure, anything can always happen in the marketplace, but based on the evidence in front of us, doesn't look like a likely scenario. Now, the reason that this big sell-off did occur, if we pop open the live news tab, is because that there was a proposed big $425 million, where's the news? There it is, convertible senior notes offering. Now, a little bit too fundamental for my liking, but it is an excuse for the stock to move lower, right? As you add more supply into the market, technically the price, unless demand is going to outweigh it, does need to respond by moving lower. So supply and demand 101. Let's go on out to like a weekly and just search for supports underneath us. I'm going to grab some more time here. 10 years should be more than enough. There we go. And what we'll notice from a weekly perspective is that our floor is kind of here closer to, let's just roughly call it 9 even. You can see, hovering above it, a little bit of a dip below on the initial sort of offering from in here, but then held perfectly to the T for the rest of this big move that we saw over time. Now, I'm not saying that it has to be in play immediately, but it's really the floor. If we start breaking down underneath 9, then you're looking at 7. And now that you're talking about a sub $10 stock, $2 moves are huge in terms of percentage points on your actual trade. So you probably don't want to be wrapped up in that to the long side if that's how it starts to unfold for some of these lower levels. Let me just expand this so we can see in relationship. Again, first target, I would be on the lookout for some sort of pattern maybe down here. If it starts to print a hammer candle, if it gives us some sort of double bottom, fantastic. There's a reason to go long there. But if not, and it just gives us huge red-bodied candles through it, then look out below. We know 7 is the last line of defense. That's what I'm seeing from the daily perspective. Let's quickly take a look at the 30-minute, and it would just really confirm that we do have some bearish activity out there. What I'm going to do is scrunch this up so we can see it a little bit better. There we go. And we'll take out the Fibonacci's, right? This is always going to be key whenever we're dealing with expansion of range. So from high down to the first low of that green candle, you'll notice that there was essentially no dead cat bounce into the 38.2. This time we'll come in. Oops, we want that tool. There we go. From there to there. This time we did get the bounce to the 38.2, but a sharp rejection, and then closed back down underneath the entire retracement of the move. So to me, again, just bearish indication after bearish indication. Also look at the last 30-minute bar of the day. Typically, if these are, new shorts who are just looking to scalp this, they will close out into the afternoon and you'll get something that looks like that. Didn't happen at all. Closed dead on the lows, really weak last candle, and an increase in volume. So to me, it's more of people selling out of this, just saying, you know what, enough's enough. If you take a look at the daily time frame chart, let's put this back to auto. I mean, just think of all of the people in here who are overhead supply and just, again, eventually they have to come to a point where they say enough's enough. And I'm not saying that every single one of the people that have traded this or invested in this have hit that point, but certainly some of them have, which is leading to some of this downside activity here. So those are my thoughts here inside of space. It does not look fantastic to quote unquote buy the dip yet. I would wait for a pattern, some sort of risk-friendly entry to emerge. And as of right now, I'm just not seeing it. If it is going to turn around, the first major step that I would just let you know would be a recapture of the 38.2, which is roughly 1045 here inside of the stock. So anything underneath, bearish, looking for lower. If we can recapture it, then maybe there's an opportunity for a higher low off of it. And then I would really be patient and see if we get the 11 break to fill the gap overhead. That would probably be the only trade I watch out for here inside of space. If you enjoyed the video or learned anything new, let me know in the comment section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.